Good morning and welcome to the Killik & Co market update. Markets have continued to rise this week. Here's the FTSE 100 and as you can see it has continued to bounce off that low that we hit 2 weeks ago. Data this week has suggested that the number of new coronavirus cases across France, Italy and Spain is continuing to flatten, and it has been reported that Austria will be the first European country to ease its lockdown measures, with some non-essential stores expected to open as early as next week. In Wuhan, in China, where the virus is thought to have started, the lockdown has been removed completely after 77 days, and people are now starting to move around freely. This encouraging coronavirus data has caused markets to rise, despite the fact that a number of new dividend cuts have been announced this week. Last week we talked about the fact that the UK regulator has forced UK banks to cut their dividends for 2020, and this week a number of large UK insurance companies have announced they have cut dividends on the advice of the regulator, with Direct Line and Aviva being two companies that have decided to cut their dividends. This morning a report was published by Link Group estimating that 53% of UK company dividends will be cut for 2020. A similar report in the FT looks at the S&P 500 in the US, and that report estimates that only 27% of dividends over there will be cut. Here in the UK, we've always had a culture of paying fairly high dividends, whereas companies in other countries have been more likely to use other means of rewarding shareholders, for example by spending money on share buybacks. So here in the UK, because our dividends are that much higher, we've therefore experienced a much higher level of dividend cuts. The comments that came along with Tesco's results this week have really demonstrated the moral dilemma that some companies are facing with regard to paying out dividends. On the one hand, it doesn't look particularly great to be paying out dividends to private shareholders when a lot of the world is suffering so much, but on the other hand, these companies are aware that these dividends are essential for pension funds and therefore for the income of pensioners all around the world. We've had some more negative commentary from the airline industry this week. We've already had British Airways and EasyJet saying they won't last much more than a few months without some serious government support. And this week we've had these comments from Lufthansa. The executive board of Deutsche Lufthansa does not expect the aviation industry to return to pre-coronavirus crisis levels very quickly. According to its assessment, it will take months until the global travel restrictions are completely lifted and years until the worldwide demand for air travel returns to pre-crisis levels. Now, Lufthansa is responding to this by seriously reducing its capacity and by taking a number of aircraft out of service. And this is actually really bad news for some of the airline servicing companies such as Rolls-Royce, and that is perhaps the reason why the shares of Rolls-Royce, as you can see here, have underperformed the wider market by such a large extent over the last couple of months. Let's try and end on a positive. There really has been a big increase in demand for communication services since this lockdown started. For example, WhatsApp, owned by Facebook, has announced a 40% increase in usage. There has been a big rise in demand for the services offered by telecoms companies. For example, Virgin Media has reported that residential broadband demand has virtually doubled since this lockdown began. And this week, companies such as BT, Vodafone and Verizon have all announced they have been raising wages and employing more people within the frontline sections of their businesses as they fight to deal with this big increase in demand for broadband services. So it is encouraging to see that not all companies are suffering due to the current situation. Moving on to have a look at next week. Clearly it's a shorter week because of the Easter break, but we have got results out from a lot of the big US banks, including JP Morgan, Citigroup and Goldman Sachs. That's it from us. Have a great Easter weekend and we'll see you next Friday.